So Goldman Sachs sold all their XRP, or did retail just miss the real play? Welcome back to our channel. Goldman Sachs just gave the market one of those headlines designed to make retail panic in their shorts. So Goldman Sachs exits XRP ETF exposure. That sounds scary, right? But here's the real problem. So most people are reacting to that headline without really understanding what actually happened. So Goldman did not necessarily sell direct XRP. What disappeared from the filing was its disclosed XRP ETF exposure. It's roughly about 154 million, which is a big chunk, and that had previously been reported across multiple XRP ETF products. So that distinction really matters, and that's what I wanted to talk about. A direct XRP sale and an ETF position exit are not the same thing. One is token exposure, and the other one's regulated financial products that institution can use for trading, hedging, market making, client flow, and short-term allocation. And that's where retail gets played every time. They see Goldman Sachs exits, and they think XRP is dead. Wall Street sees something totally different. They see capital rotation. Goldman's not a diamond hands crypto influencer on X that buys emotionally, right? Goldman does not marry a position. Goldman manages capital. This is what retail needs to understand. If they like the risk, they enter. If the liquidity changes, they rotate. If another product offers better exposure, they move. If a trade has served its purpose, they close it. It's not betrayal. This is the market structure. And from what the filing suggests, Goldman didn't exit crypto. They appeared to reduce or remove certain altcoin ETF exposures while keeping a far larger Bitcoin ETF exposure. So that tells me that it's likely not some dramatic anti-XRP statement. It looks more like a portfolio rebalancing. So risk adjustment, liquidity preference. Wall Street doesn't move capital where it's wanted for that quarter, and that's it, right? So the mistake is thinking every institutional move is a moral judgment on that asset, because it isn't. Sometimes it's just a trade. But here's where the story gets really interesting. So if Goldman was holding roughly 150 plus million in XRP ETF exposure and then stepped away, the real question is, did Goldman sell? The real question is, did the market absorb it? Because that really matters here. And that's what I want you to look at. If one major player exits a product that's weak, then it collapses, because that's what matters. If one major player, which this is a major player, exits and the product collapses, then the demand was fragile. But if one major player exits, and that's a big position to exit, and the market keeps standing and untouched, then that tells you that the asset's not dependent on one institution. That tells you that there's other buyers, other flows, other desks, other capital waiting and watching the same setup. So that's how a market matures. So Goldman leaving is not a death signal. It may be the first real stress test, and that's a different story. Now, zoom out for a second. While everybody's obsessed over the Goldman Sachs filing, Ripple has been building actual infrastructure story. So Ripple bought Hidden Road for $1.25 billion, giving it institutional access to a prime brokerage for clearing, collateral, and serious market flow. Then Ripple bought Rail for $200 million. That pushed deeper into the stablecoin payments. So then Ripple launched RLUSD, giving its ecosystem a regulated dollar-backed stablecoin. Ripple is tied into tokenized finance conversations with names like DBS, Franklin Templeton, and CME launched the XRP ETF's future. Spot XRP ETFs created regulated access. Stablecoin rules are forming. ISO 20022 modernized global payment messaging is in place. Digital asset legislation is moving. So that is the real focus. Not one Goldman filing. The XRP thesis is not Goldman bought, so XRP wins. That would be weak. The XRP thesis is that global finance is moving towards faster settlement, tokenized asset, stablecoin liquidity, and cross-border infrastructure. And Ripple is positioning XRP, RLUSD, XRPL, and its payment network directly inside that shift. Goldman was one position. The infrastructure is the play. So Goldman was one position. The infrastructure is the play. So if you ask me what's happening here, I see three possibilities. So Goldman may have closed a short-term trade, possible. Goldman may have reduced altcoin ETF risk and rotated to deeper Bitcoin exposure. It's very possible. Or Goldman may have used the XRP ETF position for market making, arbitrage, or client flow management and no longer needed that exposure at the quarter's end. Any of these explanations are more realistic than Goldman hates XRP now. This is completely retarded. Institutions move different than retail. They don't need to hold forever and to validate an asset. They don't need diamond hands. Sometimes their job is to enter, create liquidity, test the market, and then rotate out. And then come back later when there's another product or markets form. So here's the part for XRP holders that you need to walk away with. Goldman exiting is nothing. So Goldman exiting is not nothing. You pay attention to it. You watch flows. You watch whether other institutions flows. You watch ETF demand. You watch liquidity. But you do not throw out the entire thesis because one filing. That's how weak money thinks. Strong money asks one question. Is the core thesis stronger or weaker? And right now, the core thesis is still alive and kicking full strength. The world still needs a better cross-border settlement. Stable coins need movement. Tokenized assets still need liquidity. Banks still need rails. Institutions still need compliant infrastructure. And Ripple is still building into those exact problems. So no, I don't see this as the end of XRP by any means. I see this as one institution rotating inside a much bigger setup. And here's a clean takeaway. The weak headline is Goldman dumped XRP. The smarter read is Goldman exited disclosed XRP ETF position, likely as a part of capital rotation, while larger XRP infrastructure story continued moving forward. This is the difference between reacting to headlines and understanding the market. So don't get played by the noise. Goldman's disclosed ETF position may be gone for now, but the real reason XRP matters did not disappear. The rails are still being built. The liquidity problem is still the real issue. And if XRP eventually gets valued as infrastructure instead of speculation, this Goldman headline may end up looking like a real footnote before the real move. So strap in, learn what you should be focusing on, and don't get caught by noise. Thanks for dropping in, X Finance Bull. We'll see you next time.